Okay, so the reason I'm wanting to record it is I'm going to put it on the YouTube channel for sort of education purposes.
I got you, yeah.
Right, okay, so I'll share my screen, and forgive me if I start with the basics again, but this is, as I say, it's going to go on YouTube, and people can catch up later.
Yeah, no problem.
Okay, so we're looking at the 15-minute chart for gold. I've stripped it right back to the basics. First thing I want to do is explain what these vertical lines are. A couple of people have asked how they get these vertical lines. So these are the session changeover. And if you haven't got them on your chart, if you go to the top of the it's not letting me do it.
What I've noticed as well on the Global Prime site, it's all the timings are 6:02, 12:02.
That's right.
On the bottom.
Yeah, they suddenly changed one day last week. I'm not sure why, but
yeah, because I had a look at other feeds, and then they are just the normal 0, 30, 15. You know, it's only the Global Prime that's gone to 2s.
Okay, well, I'll try that. And to get these session breaks on, you go to the cog at the top there where it says chart properties. If you click on that and you go to appearance, and you check this one, the one that says session breaks, you check that, you can adjust the thickness of the lines, and you can change the color and the opacity as well. So that's just to answer a couple of queries I've had so far. And also, for the benefit of anybody who's watching this for the first time, I'm going to show you how to put the volume profile on if you're using a free version of TradingView. If you go down to this left-hand column and you go 1, 2, 3, 4, 5, 6, 7, and you click on the little arrow next to it, you'll get a drop-down menu. And if you go to the last one on that menu, it's fixed range volume profile. If you click on that and then click on the first candle of the day. So we're looking here at yesterday. This is the first candle going to the last candle. That on the last candle of the day. So you can see, I'll just look at that again. That first candle there was 23:02. Chris has just pointed out that should be 2300 hours. And the last candle is a 15-minute candle, so it's 21:47. That candle will start at 21:45 and finish at 10 o'clock. And the other thing to mention is the fact that when you're trading gold, there is actually an hour when the market closes. So it finishes at 10 o'clock and starts again at 11. So there's a gap of an hour on the gold market. So I've put the fixed range volume profile on yesterday's chart, and we'll just go through what we're looking at here. If you click on the corner there, you'll get the settings cog just up there, and you click on there. You see the volume profile. If I uncheck that, these lines here disappear. And the other thing that you can check on or check off is the POC. So when I click on that, you should see the red line appear here. So that's a point of control. So that's something that you've got the ability to change according to your style. These are my settings on the inputs. I've got ticks per row. I've got a row size of 20. I've got total there. You can have up and down, which will show you volume with buyers and volume of sellers. and I prefer it on the total. It makes it cleaner to look at. And the volume, the value area volume is set on mine at 70%. We call this strategy V70 because we set it on 70%. And what that means is that where this dark blue area here is, from the top up there now to the bottom down there, that represents 70% of all the orders placed in that particular time period. So that was in the whole of yesterday. That is where all of the trades were put. These are the prices at which the orders were placed. And if I just take off this POC for now and just show you what I'm looking at. I'm looking at 70% of, in fact, I'm going to put, we call this the 3-line strategy. So I'm going to put the 3 lines on first of all. So if I put the first line at the top of the blue area, and if I put the second line at the bottom of the blue area, what I do to make sure I'm doing these accurately is I click on this zoom in here on the left, and I highlight that area. And as you can see, it allows me to fine tune the placement of the lines. So that's exact. Just get rid of that. The one at the bottom is also exact. So I can go out of that now, zoom out again. What I wanted to show you before I put the POC on is the POC is actually at this level here. If I can just move you guys along and just check the price. So the peak of orders, the largest number, the largest amount of orders placed yesterday were 1854.71. But the first thing I notice is we call these nodes, these peaks of orders of volume. So that is the highest node of volume for yesterday. But there's a very similar level of activity at that point. That's 1857.12. And there's one there which is not too far away, that's at 1861.94. And further down, there's another one. So you're actually looking at least 3, possibly 4 important areas where the volume of orders placed was significantly high. And I'd also look outside of this 70% area and see if there are any other significant areas. So you could actually mark these areas off. And I did this on Friday and it worked out quite well. So what I'll do is I'll put a number of these lines on for you. I'll put one on there. I'll change that to yellow so it's not quite as distinct. I'll put one on there and put one on there. And I'm also going to put some, I'm not sure whether these will turn out to be significant, but we'll put them there anyway. And that's an area around about there. Okay, so we'll come back to those later. So this is today's trading. This is yesterday's trading. So the only line that we have, we call it a 3-line strategy. So just ignore the fact that I put all those yellow lines on. I put this black line here, a black line there. That's 2 of the 3 lines, and the 3rd line we want to put on is the POC. So we go to the cog and we put POC on there. I've got mine red, and there it is. What we need to do is extend that line. into today's trading. So we put it there and make it right. There we go. So we've got the 3 lines, and the area between the 2 black lines is what we call the value area. So that's value area high, value area low, and the POC. Our POC you can regard as your target. There are many days when price will start off around about the top area there or the bottom area, and will go to the POC and possibly bounce off and then go through it and up to there and then back again, and it bounces around on some days, not every day. It hasn't been doing it for the last week or so, and we're going to talk about that in a second. So I'm just running through the basics of the 3-line strategy. Value area high, value area low, POC, which is also our target. So let's go through something a bit more advanced. So I'll get rid of that. And just to make this easier, I'll get rid of all of those drawings. We'll come back to that. If I look at the 1-hour chart, this is something I do every day when I'm getting ready for trading. I look at the last, well, here we're going back to the 14th of January. So that's just over a month's worth of trading. And this just gives me an idea of the bigger picture. And you can see that 25th, 26th of January, price continued to go down for a couple of days there, right to the 28th of January. But since the 28th of January, actually since the 31st of January after the weekend, it's gone back up, and it's more or less steadily gone up and up and up. It went down a little bit there, and then it made a big climb. And then yesterday, there was a small reduction in price, and then it went back up again. And then this morning, it was at the highest it's been for some time. It's not the highest it's ever been, but it is actually the highest it's been for several months. Just there we go. It was at that sort of level in November 21. So we're looking at 3 months since it's been in this sort of area. Okay, so I'll go back to the 15-minute chart. Now I've got an idea of the trend. In other words, what that's telling me is that we're basically in an upward trend up until early hours of this morning, 5 o'clock this morning, and then it decided to change direction. And what I can do, if you're using a paid version of TradingView, is you can get a volume profile indicator, which makes life slightly easier, slightly different version. What you do is you go into, which one is it? You go into technicals, I believe. Yes, technicals. Then volume profile, click on that. And then you click on fixed volume, so volume profile, session volume. I've already got that on, so I won't click on there. I'll go back and I'll find that. So fixed volume profile, session volume. Right, so I've now automatically got the volume profile levels for, you see how far it goes back. It comes to an end on this particular chart. It comes to an end on the 23rd of November. But what it does is it gives us, if you look at this point here, look at today's trading, we've got 1, 2, 3, 4, 5, what we call virgin points of control. In other words, points of control which haven't been taken out yet. Now they're of interest because what I certainly found when I back tested this strategy was that price will always go back to these points at some point. I think of them in the same way that Paul talks about imbalance when he says the price is going to go back to take out that imbalance at some point. If only I knew when. We don't know when it's going to happen, but it will go back and it will take out that level, that level, that level, and that level. There's no doubt that it will go back. So let's just get a closer look at today and see what happened today, and then I'm going to work backwards. So we've got yesterday's point of control, which is here. So if I just extend that, now something that you might notice is that I'm currently on the 1 hour chart. See what happens when I move to the 15-minute chart. There is a variation. The point of control is slightly different when you change time frames. So it's very close, but it's not the same. So what I normally do is I trade on the 15-minute chart or sometimes a 5-minute chart. But I have noticed that the point of control is presented differently when you change time frames. So what we've got is yesterday's, I'll just zoom into that and make it accurate. I just need to move it down slightly. There we go. And zoom out again. So we've got yesterday's, sorry, yes, yeah, that. Right, I'm confusing myself now, Anna. That is actually today's point of control, and down there is yesterday's point of control. Now let me just, if I just now I need to just explain what happened there. When I was looking at the chart earlier this morning, today's point of control was up here, and it's now down there. And if you remember last week, I said that that's part of the reason why we work off yesterday's point of control, because today's point of control is still developing. And as the day goes on, it may shift, and it has actually shifted in the last. Well, I don't know when it moved, but it certainly was up there this morning, and during the course of the day, it's moved itself down to there. So I'm basically trying to explain my thought process based on what I've learned trading gold over the last few months. And one of the things that I keep in mind is these nodes here, because that there has become the point of control. But again, if you look up there, there's a very similar level of trading going on. And if you look there, there's a very similar level of trading going on. Now, the reason I'm pointing those out to you is that at some point, price may well go back to those levels. So these may become, they could become a target. And price will, if it goes from where it is now, when it goes up to this point here, you have to consider, is it going to hit that? Well, it will, it will at some point hit that target, but what you have to ask yourself is it going to bounce off that target, or is it going to break through? So bounce or break, it's a bit of a support and resistance, and that level there is also a support and resistance, and that level down there will also be a support and resistance. And if I go back to yesterday, so we're looking at yesterday's as a target for today. Now, yesterday's point of control is very close to today's point of control. Yesterday's is slightly lower than the current one for today. But if we put the field of play, if you like, if we put it a value area high and value area low, and that area between is our field of play. First thing I notice is, can you see how price has gone down to the target and then it's gone into consolidation? And then it eventually broke through and it went down to this line here. And if we go to a smaller time frame, there was consolidation happened there as well. So there was quite a bit of consolidation here on the 5-minute time frame. And then it broke through and it went down to this level here and some more consolidation. Now, when I looked at the chart this morning, as I said, a POC was up here somewhere. But what was happening at sort of, I think it was about 5:30 something, let's say there, I could see that we were in an area of consolidation. So this is how I got some trades this morning. I decided that I wasn't going to sit and watch the charts all day. So I marked off this area. And the way I did it was trendline tools, parallel channel, go along the top of that, and then down to the bottom of that. And I put an alert on that channel there. I clicked on the top, clicked on alert. I asked it to give me an alert when price exited that channel. And sure enough, it messed about quite a while, consolidating, and then it made its move. And I got an alarm, I got an alert, I should say, at that point there at 7:32, and I got into a trade. I didn't get all of those pips, but I got some of them. And we're now looking at price down at these lower levels. And I think if we go back, we might find that it's at a significant area. I'm just looking at this area here where there was a bit of activity on Friday. Wasn't a huge amount, but it has provided some resistance for price here. And so if we're trying to decide what's going to happen next, one of the possibilities is that it's going to turn around and continue trending upwards, or it might want to come down to this level here. And it's highly unlikely that it'll come straight down to that level. It's equally unlikely that it'll go straight up in one move up to a higher level. So what I try and do is I try and find out what the sort of staging posts are, where the likely or, you know, what does Jeff call them? Potential reversal zones. But what he means by that is, where is it going to sort of stall? And I've just spotted something there. Can you see in this area here? There. There's virtually no orders being placed at that price, at those prices. So between that level there, which is 1844.58, and that level there, 1841.44, there's almost zero orders. Just out of interest, I'm going to no, I can't do that. I was going to look and try and establish whether these few orders here were actually buys or sells. I can probably do that if I move. Yeah, I know. So if I go into inputs, and instead of total, if I put up and down, and then go back to zoom in on that area. That's where I was looking, isn't it? So these are all buys. The yellow ones are selling orders, and the blue ones are buys, and this is entirely blue. So the only thing that went on between that price and that price was buyers came in. Oh, the thing that I spotted there was, can you see where price is now? Where it's struggling to get through. At the bottom of those wicks, it's tried on a couple of occasions to get through and has been rejected. And if you look at where that is over here, it's exactly that area that we were looking at. I'll mark it. There. I'll put another line on there. So what that tells me is, if and when it does break through there, it's probably going to shoot fairly quickly down to this level, because there's no activity in there. And look at what happened on Friday. Friday is when there was very little activity in that region there, and on Friday it went straight up without any hesitation whatsoever. I think that's what Paul would call an area of imbalance. It's all buyers and no sellers. In fact, almost the whole of that move is buyers and no sellers. So that I've just marked off there. Call it what you want. I just call it an area of interest. Paul would probably call it an area of imbalance. Either way, it's going to affect what happens to price. So if price is coming down, if it's going to break through this line, it's likely to go to that line there, and it's likely to go very quickly, because the other person that does this kind of trading is a lady called Anastasia. Yeah, she's either Polish or Russian, and she calls that a vacuum. No, she calls it a vacuum. But she's what she's trying to demonstrate is that there's nothing there. There's no resistance there. It's in between there and there. There's no resistance. So it will move pretty sharply, and possibly before anybody's got any chance to get in. But let's just measure it. it's 34 pips. 34 pips at £10 million a pip, which is what it takes to move a pip. $10 million, I should say. So that's $340 million is involved in that little area there. So that's one area to look at. And when it gets to this point, this is an area where there was quite a lot of activity. And then there's another, not exactly the same, but another area of vacuum. And these are what I would call the points of interest. That point would be somewhere where price would go to. That point there would be another. That point there, and finally down to that point, because this line's got to be taken out. Price has got to come down to this at some point. So if we're watching price, waiting for it to come down, there's a couple of potential areas of interest. I'm conscious that I'm sort of rabbiting away and nobody's asking any questions. So here's your opportunity to let me know if I'm talking gibberish or not. Anybody got any questions? No? Or is it just that nobody's got?
So today's POC hasn't formed yet.
Today's POC is still forming, which is why we tend not to focus on it, because it has changed since I last looked at the charts. When I first looked at the charts this morning, it was up in this area here, and it has over the last few hours moved itself down there. So it is a point of interest, but not as interesting as yesterday's point of control. However, they are almost identical. So, for all intents and purposes, you can look at that point of control. But I say that the reason we look at yesterday's point of control is because that is now fixed. That's static. That's not going to move, and so we can work on that. If there are no other questions, what I wanted to do is look and see what happened last week, because we've been through a period where price was coming down daily, and then we've gone into a period where price is going up daily and leaving behind these virgin points of control. And yet before that, we were in a period where we were getting lots of, the price spent its whole day bouncing around in our field of play. So if it was going to do that today, it would be sort of bouncing around in this area here. And again, it looks like that's not going to happen today. It has come back to our point of control, but it's come way past it. So what I thought was interesting was how price moved last week. And if we look at third, so that's Tuesday, that's Monday, Friday, Thursday, Wednesday, Tuesday, Monday. So this is Monday the 7th. Yeah, Monday the 7th. So if we just look at Monday the 7th onwards. So starting here, we had, I'll zoom in on that. It's an interesting, well, it was interesting. It was also quite profitable for some of us. There are a lot of, this is Monday, and this is Friday's point of control. This blue line below. So on Monday, price never actually went back to the point of control. So it sort of defied our 3 lines strategy, if you like. And because of that, we have to go to a more advanced version of V70, which is purely just developing as we go along. And what you can see is that price started above the point of control and it remained above the point of control for the entire day. And then look at the following day. This was Tuesday. It started. This is a point of control. It started above. It went down and touched it once, and then it went above it, and it stayed above it all day. So on Wednesday, this is our point of control, and it never even went anywhere near it. It stayed above it the entire day. So Friday, I think we're Friday, Monday, Tuesday. Monday, Tuesday went there. So on Thursday, this is our point of control. This was the oddball of the week. It started above it. It stayed above it until the 1 o'clock New York opening, or 1:30, if you like. And then it crashed all the way down. It went not only to the point of control, but it went and it literally took out the previous day. Sorry, Tuesday's. This is Tuesday's point of control there. And that is Wednesday's point of control. No, let me get my days right. Monday, Tuesday, Wednesday, yeah. So on Thursday, it took out the previous day's point of control, and it also took out the day before's point of control. I'm going to zoom in there and show you how precisely it went. It wicked just below it and then went back up again. So this is the Wednesday's point of control. Or it was Tuesday's point of control, wasn't it? But it went down once and tried and never quite made it, and then a candle later it went through it and immediately went back up. I mean, that was a really quick move. That happened in a minute or 2 minutes. But that sort of proves my point about it will eventually go back and take out those virgin points of control. That was a virgin point of control. Price went down, slammed up, and then got back to its normal activity. And so what happened? This was Monday, and after it finished, sort of moving slowly, it got to about 3 o'clock, and it suddenly went up. And there was a lot of pips in that move there. And the same thing happened the day after. A lot of pips in that move there. A lot of pips in that move there. This was the oddball where it slammed. Price went up, it went down, it went back up, and then down. Then it settled into its pattern. A lot of pips on that move there. And then on Friday, it just went haywire. I mean, that was Thursday's point of control. So it started below, it went up and touched it, it went through it, took it out, and then immediately did a huge increase. And as I say, there's mostly buyers in that entire move. I think I remember that was about 300 pips from the bottom of that move to the top of the move. So we're back to Monday, and yes, that's Friday's trading. This is Monday's trading, and it's continuing. It's going up. It came back down again. It gave us another. I mean, I got into that move there. I got out somewhere near the top. I stayed out whilst it went back down, because bear in mind, we're in an upward trend. So I go with the trend, and I got in somewhere here and took quite a few pips out there. Then it went into consolidation. There was a few pips to be had this morning, early hours. This was sort of 2 o'clock UK time, consolidation, and then slam down all the way there. And it's now in consolidation. So what I'm going to do for the rest of this afternoon, to try and get a trade out of this, I'm going to put a parallel channel on here. Take it across there, take it down to there, and I'm going to put an alert on that. So when the price is exiting the channel, once per bar, job done. So I'm not interested in, it's actually just popped its head. I haven't drawn that well enough. This is just a rough, you know, it doesn't have to, you don't have to draw that channel accurately. What you need to know is when it decides to move out of that channel, and then you can come back and look at it again. So my theory now is it's either going to come down and go down to that line there with a couple of staging posts in between, as we previously discussed, looking at these vacuums here, or it's going to head north and continue this sort of last week's and early this week's trend of moving upwards. You've got to bear in mind why is gold increasing in price? Can anybody take a guess? Thinking about what's going on in the world at the minute. There's
the Ukrainian situation.
Sorry, say again.
Situation.
So you're breaking up.
I think that would make people be looking to be kind of safe in gold.
I couldn't make out what you said there, Mike. But
I would look at the situation in Ukraine.
That's right. Yes, exactly. That's what was going through my mind.
Be safe in gold, I think.
Yes, people are investing in gold rather than in dollars at the minute because of, well, I think there are two factors. One is the possibility of something happening in Ukraine, and the other thing is that there's the cost of living, inflation cost is rises as it is in the UK. It's going quite high, so the dollar is getting worth. But the dollar in your pocket is getting worth less, and investors are turning to gold as a safe haven. So that really is what's behind the steady increase. Well, not steady, a rapid increase in gold in the last week. What's caused this drop? I don't know. But to be honest, it doesn't matter, because whether it comes down to this line or whether it goes up to previous levels, I'm still going to take some pips. But what I need it to do is show its hand. And as I've said before, it'll pop its head out there, or it'll pop its head out there. It may well pop its head out and then go back, which is a signature move of the big institutions. They'll take it down there to take out all the stop losses, or they'll take it up there to take out stop losses above, and then they'll take it back with the way that they originally intended to take it. But that's my strategy for trading gold today. I'm just going to sit and wait, get on with my life, and when my phone buzzes, tells me that it's got out of the box, I'll come and look at it again. And this is how I'll analyze it. I'll put on the matrix. At the minute, on the 15-minute chart, we're still on a downward trend. I'm just checking that the settings are correct. Yes, when I'm looking at it on the 15-minute time frame, my matrix time frame is set to an hour. So I'm on the correct time frame. So the Ninja matrix is telling us that this is still biased towards a sell. The other thing that I'll look at when I get the alert is the Ninjacator. And the way I tackle this is the yellow moving average is the 5 MA, the red moving average is the 13 MA, and the orange is the 20 MA. So it's been pretty solid downward movement. There's been a lot of space between the 5 and the 13, and also a lot between the 13 and the 20. That shows a strong downward movement. It's closing now. It's starting to move up. In fact, we've got a ninja up. We're on Ikenashi candles, so the ninja up is showing. So if it continues and goes up, we'll probably get a ninja matrix. And what we need to do is wait until the 5 MA gets above the 13 MA. So I'll be looking for a ninja up, a ninja matrix up, and the 5 MA above what will become a green 13 MA. And only when those conditions are satisfied will I consider getting in. Anybody got any questions on that? And then I'm going to introduce a further complication. Something that came up yesterday when somebody took a trade. I think it was Wayne. I don't think Wayne's on at the minute, but he might be watching on Facebook. But I think it was Wayne got into a trade when all of the indicators that I look for were in his direction. So he had the Ninjacator in the right direction, he had the Ninja matrix in the right direction, and he had the 5 MA at the correct side of the 13 MA. And he said, but then it totally changed direction. And so I said, send me the details, send me the price and the time that you entered, and I'll have a look at the trade and see if I can find out what caused the problem, because he was on demo, but he lost the trade. And when I looked at it, he'd done everything right. Everything was lining up correctly. So I looked at it. He sent me a screen grab of his chart, and what I noticed was he also had he had this, which you've all got access to in the Ninja group. It's the multi-time frame stochastic, where you can, if you're on the 5-minute chart, you can look at this is a 5-minute stochastic, this is a 15, the black one is the 30, the orange is the 1 hour, and the yellow is the 4 hour. So what he was asking, why did that trade go wrong? And I said, you did everything right. Sometimes it happens like that. However, when I saw he had this on the bottom, I think he was going for a buy. Yes, he was going for a buy. It was on gold. He was going for a buy. And what I noticed was all of the stochastics were actually at the top at the time he entered the trade. So I said, since you were using the multi-time frame stochastic, the only one thing that you did wrong was you entered for a buy when all the stochastics were at the extreme, which doesn't necessarily mean that price is going to go down, because the stochastics can actually stay at the top. They can snake along the top for quite a long time. You can see here they're snaking along the bottom for quite a while. So they could have stayed in his favour and stayed along the top. But what actually happened was the 5 minute started to go down almost as soon as Wayne got into the trade. So I said I've analysed his screen grab, and the only thing that I would point out is you need to pay attention to the multi-time frame stochastic. If you've got it and if you're using it, just keep an eye on it as well. Although I must admit, I quite often enter trades without looking at that. It's, maybe I need to start looking at it more closely. Right. We're nearly out of time, and unless anybody's got any questions, queries, observations, whatever, we'll call it a day.
So just a question, you have a couple of confirmation before you enter the trade, right?
Yes, I've got, I'll run through those confirmations again with you. If you're in the Ninja group and you go to on Facebook, I won't do it that way. I'll stick with this. If you go in the Ninja group, in the Ninja Forex Traders group, Facebook group, there's a section called Guides. And if you scroll down the guides, you come to the V70 strategy, and included in there is my checklist of how I do it. But I'm going to run through it again with you. It'll only take me a couple of minutes. I'll take off the matrix and I'll take off NinjaCat. Right. So let's say, well, let's pretend we're at this morning and I've got an alarm to tell me, I've got an alert to tell me that price has come out of that parallel channel. So I come and look at my chart, and I see that it's popped out, and it's meandered around for a while, and then it makes a move. So at this point, I'd be thinking, okay, this is interesting. Let's have a look at it. Before I get into the trade, the first thing I do is I turn on the Ninja Matrix.
Yeah.
And I've got a Ninja Matrix down there. That's a yellow triangle there. So we've been in a Ninja Matrix down for an hour or so now. So that gives me the first confirmation. We're going with the trend. The trend is down, and we're going with the trend. So that's number one. Point number one ticked off. Now I go to Ninja Matrix. Sorry, the Ninjacator, and I've got mine set. I'll show you my settings in a second. But the first thing I notice is not only have I got a Ninja Matrix, I've got a Ninja Matrix there, the yellow triangle, but on top of it, identical, I've got a Ninja down. So I've got a Ninja Matrix down, I've got a Ninja down at the same point. So that's two things in my favor. Two boxes ticked. Now the third thing I look at is the moving averages. And in your Ninjacator, if you go to setting, if you go to inputs, and the moving averages, I've got them set. Number one, I've got five. It's a 5 moving average, so it's looking back at the last 5 candles. I've got EMA 2 at 20 moving average. I ignore 3 and 4, and the one that is automatic is a trend change M3, which Kevin has programmed in as 13 MA. So those are the three that I've got. In terms of style, I've got the yellow, which is the 5. I've got the trend change, which was 13. I've got it changes from green to red. And then on number 2 is the orange one, which is the 20. So I've got 3 moving averages: the yellow 5 MA, the red 13 MA, and the orange 20 MA. And I look for, if I'm looking for a sell, I want the 5 MA to be well below the 13. So if you look up here, they were all clumped together. Can you see in this channel here, they were all on top of each other. There was no space between them. That was an area of consolidation. Then it started to move away. The 5 started to move away from the 13. And here we also got a gap between the 13 and the 20. That's an ideal situation for me. I would enter the trade with just 2 of those things. So at this point here, where the 5 and where the 13 is on top of the 20, I would still get in. But if I wanted to be even safer, I would wait until there was some separation between the 13 and the 20. But the fact that the 5 is moving away from the 13 is enough to tell me to get in. So I will get in at this point, either on that candle there, or more likely on that candle there. Because the other thing that tends to give you a safer trade is, you see how there's a gap between the channel and the start of that candle.
Yeah.
That tells me this is more this is a more solid downward move. It's a safer downward move. It's less likely to turn back on itself, because there's a clear gap between my channel, the bottom of my channel, and the top of the candle. So all this way down was, I'll be watching this, and in terms of getting out, well, let's talk about stop loss. Well, I'm looking at a 5-minute time frame. So if I got into this trade here, my stop loss would be just above that orange dot. That's a PSAR. So I put my stop loss just above that orange dot. And where would I get out? Well, I would stay in right down to this point here, because we've still got a Ninja Matrix down, we've still got an indicator down, and we've still got the yellow 5 MA well away from the 13 MA. And the PSARs are still on top, pushing the price down. Now, I would certainly be out. For safety reasons, I would want to, as soon as that ninja up appeared, I would want to get out. If Jeff was doing this session, Jeff would say, I'm going to stay in, because the Ninja Matrix has stayed red. And Jeff would say, stay in, trust the matrix, because yes, you're going to lose a few pips there, but it's going to continue going back down. And Jeff would stay in until the Ninja Matrix went to up. But Jeff would probably get out at that point. I'm not as confident as Jeff. I would want to be getting out in this sort of area. As soon as I saw the yellow MA starting to curl, it's in a downward direction, downward, then it levels out, and then it starts to go back up. I will be seriously thinking about getting out. And certainly when the PSAR goes to the bottom, I would be getting out. I'm not saying that Jeff doesn't know what he's doing. Jeff certainly does. He's a better trader than I am. And he designed this Ninja Matrix, therefore he's got a lot more confidence in it than I. But as I say, I'm just telling you how I trade, I would get out of that trade as soon as it starts to turn. But, you know, if we'd stayed in it, look what happens. It went right the way down here. So yeah, I would have got out there. And if I'd stayed in, I could have gone right down to there. So it's a question of personal choice. But I would rather stay safe, because if that, I don't know whether that's going to go up or whether it's going to meander along there. So I would get out there. So does that answer your question?
Yeah, perfect explanation. Thank you so much.
Okay. Any other questions? And if not, I'm going to call it a day, because I've got a dog sitting at my feet wanting to go out. Okay. Well, if there are no other questions, I'm back on again at 8:30 UK time in the morning. And we'll look at where price is tomorrow and where it's gone this afternoon. I'm just looking at what's happening now. It's just popping. It looks as if it might be about to pop out of the top there. So I should be getting an alert anytime soon. Okay, so thanks very much for tuning in, and
Thank you.
I'll be back tomorrow at 8:30.
Thank you for your time.
Thanks, Richard.
No problem at all. Thank you. Cheers.
Yes. Bye.
Bye now.